Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, May 27, 2015, and this is the daily report for gold and silver. We do have the precious metals roughly unchanged on the day. We're currently looking at gold 1187.20, puts it up about 30 cents on the day. The low 83, the high 90.40. Silver also trading lower on the day, off about 7 cents at 16.75 with a low of 58 and a high of 81. Now, in terms of the dollar's influence on the precious metals, it's nominal today. As you can see, US dollar index currently at 97.26, off about 0.03 or 0.03% on the day. So traders, what is our current outlook for the precious metals? We'll start specifically with gold and look at our short-term indicators first. For our Japanese average chart, that's what you're looking at on the top. Also having a intermediate and minor count in terms of our Elliott wave count. We have our momentum index along with our MACD, or moving average convergence divergence. First to the MACD. When we look at that, we are still in a flurry, moving to the downside. We haven't seen any waning whatsoever. However, what you can see is a small hook right here, which means that they are coming closer together. In other words, with the moving average MACD, what we're looking for is whether they're converging, whether they're moving apart, whether they're coming together. And so you've got that first sign of a hook. Of course, you can easily get these false positives, as we've talked about in the past. Momentum looks like it's waning, but it is still in the negative. So that at least is telling us we should see lower pricing. We're not in a oversold market just yet. Momentum index, we'll take a look at that, and you can see that that's actually been waning just a little bit, but still really strong in terms of market potential to the downside. And then lastly, we'll look at our current Elliott wave count. And on our current Elliott wave count, it is looking for a bottom in this area. And what our short-term Elliott wave is looking at is a very, very short 1, 2, long 3 down, and that would put us in terms of our minor count in 4. The predictions of the system itself, the Elliott wave, typically what you look for on a wave 4 in terms of where it's going to go, and that's where these lines here are derived from. But in terms of where you think that that market could go, it's really signifying looking at the top of, or the onset, I should say, of 3 to the conclusion of 3, and then it is looking at 38% retracement levels. It's also looking at 50% retracement levels and so forth. So that's where these lines come in. So we might get a little bit of a bounce here. If we get a bounce, that bounce should take us roughly to about, call it $1,200. And really, this, of course, is our short-term view of the market. From there, though, we would complete wave 4, whether it's at this point at 1197 or up as high as 1204, and then begin to trade lower. If this is going to turn out to be a true wave count, wave 3 is going to have a higher low than we saw on wave 5. So that is our short-term view of the market. So the next market view that we're looking at is a half-day chart. Now, these half-day charts are just in standard candlestick format, but we've got a more protracted wave count. Same type of scenario in which we're looking at a wave 1, wave 2. This being our wave 3, a predication on wave 4 is going to be roughly the same point. This begins at 1193, but this wave 4 count comes in, tops out just at around 1200. So again, that is what we would be looking at, the short term and really interim term. And then following, of course, following the conclusion of wave 4, you would go into some sort of a wave 5, and that could take us to new lows that we haven't seen in a while. Of course, it wouldn't take out this recent lower. It doesn't really have to at around 1140, but the Elliott wave count that would be predicting a move would be predicting a move roughly to about 1160. So traders, that was our view in terms of a short-term count. The real intermediate count, we've really got to take a look at our daily charts, and you'll see there's a key distinction within that. In other words, what we're looking at in this particular scenario, wave 1, wave 2, our long wave 3 down, and it appears as though we have just completed our wave 4 and are currently in a fifth wave lower. Now realize that within this fifth wave lower there's going to be a subcount, and it is that subcount that we addressed first with our short-term work, meaning we could see a clip maybe back up to about 1200 here short-term, but then that would be followed by a longer move down. And it's really this longer move down that we want to concern ourselves, because on this particular wave count, we are signaling wave 3 terminating at roughly, what, 1140. So 1140 would be the mark that we would look to actually take out. So that's our intermediate count. And when we put it all into perspective, what I recommend we do, we don't have a lot of room to the upside. 85 to 1200 is about $15. You could make that play short term if you want to. Look to short the market anywhere between, call it 1195 and call it 1205, right in that area. That's going to be the spot that we should see a termination of that shorter term move and move back into this fifth wave down. So traders, lastly on today's show, I do want to cover our longer term or longest term count in terms of our current Elliott wave count. We of course are in a bear count. We've been in a bear count ever since the market has gone to 1800 and has begun to move down. When we look at it in that way, we have a 1, 2, we have our long 3, we then get a wave 4, and according to this Elliott wave count, we've actually terminated our fifth wave, and now on a bear wave count, we're into some sort of an A, a B, and our C. So longer term, this C should take us anywhere between 50 and 75% of this entire move here, which could take us, you know, to maybe 1260. So that's a longer term count. That would be an ABC. You would get a top at around, call it 1260, somewhere in that area. And from there, if the market continues on its bear trend, we're going to get a 5 count down. 1, 2, 3, 4, and 5 down. So that would be our longest count in terms of where we're looking at overall in terms of the technical aspects of gold. So finally, I want to take a look at one more gold chart today. I understand that we haven't covered some of the other markets, but I felt that it was really, really important that we actually go through and show you our short-term, intermediate, and long-term perspectives. We're back to this intermediate short-term, and the one thing that I do want to point out is when you take a look at this, we've definitely had this cascading channel down after hitting those highs of about 1230, just a little bit above that. So that's really the high mark that we have absolutely not been able to take out. This particular count, as I said, on a short-term count, predicates we could see a bounce. That bounce could be anywhere between 91 and 1200. That would conclude our fourth wave. That would take us into our fifth wave. And as I said, our fifth wave could, in fact, take us to new lows in terms of market price in gold. That would also warrant the same with silver. We'll look at silver in detail at some point this week also, in the same way we just looked at gold. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.